Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, July 30th, 2021. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES 6-day PivotBoss Advanced ADR indicator here. You can see how compressed that range is, under 40% of average here. That's this range right there. Significant compression over the last 6 days. You can add 7 if you want. And you'll see again what the potential energy is here. 177 points of potential movement that could be seen. As always, this market here has been and has remained very, very bullish. Another time we had a very narrow 6-day range was here, very similar to what we're seeing now. And we had a pullback first, a strong low, and then extended upwards to reach that target. So here's the compression, breakdown, and rally. Similar type of scenario could play out here where we pull back early in August rather. We see what type of rejection we get, and then we see a continuation higher. So if we're going to see, say, 175 points of movement, then from 4,300 you may see 4,475 as an upside target. So again, that's something that we'll be looking at here heading into August. August, seasonally speaking, tends to have a pullback that month. We'll see how much of a pullback, if at all, we get. But again, 4-day range here, very, very narrow, and suggesting some, 6-day range now, very narrow and suggesting significant movement here up ahead. It may close quietly here this week and today, but next week we'll be watching the edges and see how this thing moves. If we take a look here at the NQ, very similar price action for this one, a little bit more wider of a trading range. So 67% of ADR over the last 6 days. 1, 2, 3, 4, 5, 6, 7. If you go 7 days, you likely have barely a narrow range here, 62% of average and a compression bar there. So looking at these 7 bars, so again you can see the compressions there. For the NQ, 700 potential points here of energy on a 7-day range. The last time we had a range that was that narrow was here, and you can see again a downside break first and then a rejection and a push higher, and it eventually got that upper red dot. So again, right now, very bullish market. Any pullback that occurs early next month could be a tremendous buying opportunity to the tune of 700-point move. If we do see a pullback early next month, the previous month's low is going to be very, very important. Look how narrow this range is from the current month, and any push downward into this zone could provide a rejection opportunity at the previous month's low at a CLVN, and that right there could lead to a great bounce to the upside that takes us back toward 15K and beyond. All right, let's take a look now at crude oil. Crude oil right now down about 0.1%, but has already seen a pullback to the midpoint of the previous session. Previous session was a breakout day from this narrow range here. Got a nice little breakout continuation, held those highs. The pullback right to the mid, that's called the fade after trend day there. This one right there hitting that midpoint, and for bulls looking for a continuation higher, that midpoint becomes the best entry. Already that thing has bounced off that mid almost to the tick and has reversed higher. Looking for further strength here. If we can get above 2-day highs here, it opens up more upside. So again, one final thing, that $70 level right there, very, very important. The fact that it got back above it and held it, as we mentioned before, suggests a continuation toward the upper end of the range. That's 75.52. So ultimately, we may be looking at 75.52 by early next week. Now, taking a look here at gold futures, this one's down about 0.5%, but it is again a fade after a bullish trend day. We had a major breakout here. We talked about the 1790 level being very important. If it can hold the 1790, we may continue to trade between 1790 and 1835. We've seen that play out. It hit 1837s. But are we ready to continue higher? Ultimately, I've mentioned before, this rejection here, that lower low failure, suggested that we go to 1800. If we can push through 1800, we can hold and continue toward 1863.80. That's the FOMC key level from June 16th. Ultimately, that's the target up above. Do we get a move right away, or do we continue to trade in here a bit more? At the moment, we are stuck inside this range, but as soon as we can get above 1840, it opens up quite a bit more upside. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Have a fantastic weekend. Be sure to like, share, and subscribe, and I'll see you in the trading room. Take care.